We're both feeling kind of frustrated. And so during our conversation, Chris and I thought, we could just go back to the fundamentals. Um, I wrote the 10 rules of silver investing some time ago, and they're really designed to help people that have never invested in silver not make a big rookie mistake.
The land of Arcadia.
Well, hello there, my friends. Chris Mark is here with you for Arcadia Economics. And I'm quite excited to be joined once again by David Morgan, one of the key figures in the silver industry for many decades now, and really who's been a mentor to me and someone that really just have quite a fond appreciation of. And of course, also very exciting to talk about silver and all the things going on. And we're actually recording on Thursday night where the silver price has actually been up 2 days in a row,
Yeah.
even touching on $20. This will be posted Monday, so God only knows what will happen between now and then. But David, it's quite a pleasure to have you back on in here as always. And how's everything going with you tonight?
Oh, things are all right. Not too bad. I can't complain. Decided I would keep my Hawaiian shirt on. It's so doggone hot here, even in the Northwest. But no, I'm looking forward to it. We spoke off air a couple days ago, and we're both feeling kind of frustrated. And so during our conversation, Chris and I thought, we could just go back to the fundamentals. Um, I wrote the 10 rules of silver investing some time ago, and they're really designed to help people that have never invested in silver not make a big rookie mistake. And even for a seasoned professional, they're designed to help remind you of what's really pertinent when you invest in the precious metals market. So I said, why don't we just do a reset, Chris, and just kind of go with the fundamentals? I mean, if you look at the top NFL or Major League Baseball or NBA or whatever, I mean, the stars of stars still practice the fundamentals. So you agreed? So here we go, I guess.
Well, I am looking forward to digging into that. Although perhaps before we get to the rules, and I think it is certainly a good time for that, especially I guess those bear markets make you double check and check your
Yeah, right.
preferences and see if you've been missing something. And certainly I think that's what I've been doing and a worthwhile thing to do. Although curious about your thoughts, real quick on this rally we've seen the last 2 days. I was listening to Jerome Powell's press conference, and I know there was one point where he said that he's moved aggressively to get rates to something that now is neutral. It almost felt to me as if that was one of those things where I wonder if he had time to write out his sentence, if he said what he actually meant. Because after that, he went on for about 45 minutes saying that he's committed to fighting inflation, even if that means that there's a slowdown or some pain on the unemployment side, that those are sacrifices that he might have to make. So I was surprised the day after that to see the markets rally, and especially gold and silver, which I was happy about. But curious to get your thoughts on that.
Yeah, well, I think it shows that the market is wising up because, the conventional wisdom is that if interest rates are increased, it kills the gold market. That's only true if it's above the inflation rate. So for interest rates to really have any substantive value where it really can quote unquote kill the gold market, it'd have to be above 9%. And we're sitting there, dilly-dallying around 3%, 4%. What if we get to 5%? We're still, 4 points away from just being even with inflation. So I think he's going to continue to talk to us tough, and the market's going to continue to ignore it. That's at least what we're seeing present day. But 2 days don't make a market, but it is nice. And of course, I thought there'd be what I call a relief rally, no matter what.
Yeah.
And then, of course, we got the news with this $50 million precious metals purchase, with roughly half of it being in silver. So a lot going on at this point in time, Chris.
Yeah, and I'm curious your thoughts on the sell-off as well, where it's a weird dynamic where the conditions that many people have purchased silver for, high inflation, systemic risk, are here. Yet we've seen the price of silver come down, and perhaps that's reflected by that large order that we did see, and whether more start to approach things that way. I guess we'll find out in due time. But were you surprised at how hard things have sold off?
Yeah, I mean, having this the amount of years on me that I have, I kind of look back to look forward. I think it's a good way to, study history, and you probably got a better idea of what you're going to see going ahead. And if you look at what happened in the 2008 financial crisis, silver got whacked and gold fell down about 30%. And this time they haven't sold off as much as they did last time, but they've sold off. And that to me was normal based on recent times. And they'll be the first to bounce back. When silver basically made that bottom in 2009, I believe, it was around $9
Yep.
and went up over 500% or fivefold. And gold more than doubled. So, I'm not saying that those numbers will come again, but they may. And so I think we just have a little bit more patience that we got to muster. And then I think we're on our way. I think by the end of this year, I think gold will be looking pretty good and silver will be looking far better. I mean, even Goldman Sachs, as much as you can or cannot trust them, said that the 2022 print for gold will be 2,500 by the end of the year. So that's what, $700 or so from where we are now, 7 or 8. So I think the last half is going to be a lot better than the first half.
Yeah, and certainly, even though the gold price off of its above $2,000 high earlier this year, that's certainly something that's helped a little bit while you watch the silver price get clobbered. It's not as if gold is down to $800 or people have
Right.
just completely forgotten about the value of metals. So, with that said, why don't we dig in now to the 10 rules for silver investing, which you have published for, I guess that's been around for quite a while. And I think it would be useful now, especially, when there's people like me that probably go a little overboard with percentage allocation. But why don't you take it away from there and give some guidelines that can help make silver a positive thing in people's lives as they're investing?
Yeah, this was sort of a surprise. I hadn't really, excuse me, I hadn't really established myself too much in the silver community. And I got an invitation from someone in the UK that writes the Global Investor Book of Investing Rules. Uh, Subtitle is Invaluable Rules from 150 Master Investors by Philip Jenks and Stephen Eckert, which includes tactics, strategies, insights relied upon 150 of the world's most respected financial experts, are revealed in a concise, digestible form. And so there's, so little, silver is such an untalked about market, and it's such a small market. They had to find somebody, I guess, about the only person they could find was me. But regardless, they said, we want you to write the 10 rules. We want them to be sharp and pithy. So I went off and did that. And of course, rule number 1, as you can read, is when all else fails, there's silver. So it's like, wow, that's a pretty important rule. And I put that number 1 for a reason. But I explained that in number 1, while no one likes to be a prophet of doom, the simple truth is that silver is the world's money of last resort. Should a severe economic collapse occur, leaving paper assets worthless, silver will be the primary currency for purchase of goods and services. Gold will be a store of major wealth, but will be priced too high for day-to-day use. Thus, every investor should own some physical silver and store a portion of it where it's accessible in emergency. So there's a lot in that first rule. I'm implying here that you should have some at hand, that it could be in a worst case scenario used for barter. Gold would have too high a unit value. And everyone that thinks that there's a possibility of a financial conundrum, or since a conundrum of financial collapse or near collapse, should invest in silver. So if you take that to the thought experiment and say, well, what if every investor did buy some silver? Well, if that were the case, you probably couldn't put a paper price on it, because just in the United States, which is 5% of the world's population, if everybody in the US bought 2 silver ounces, you'd wipe out the annual silver supply.
Yeah.
So not everyone can own, a little silver. I mean, depends what you define as a little, but amount to make a difference. Let's say, I used to say, Chris, that a bag of silver, if you're wealthy, a bag of silver per person in your house. So if you had a family of 4 and you were wealthy, you'd have 4,000 face value of junk silver. If you're of modest means, you want to shoot for somewhere probably around $100 to $200 in face value, which is about 5,000 in fiat right now.
Well, I think that makes a lot of sense, keeping things in balance. And as we pull up number 2, I guess that leads right in there. Start small, keep it simple. And what would you say there?
Yeah, that one, too many investors, upon deciding to beef up their metals portion of their portfolio, buy too much physical silver at once and in the wrong forms. I mean, I would have that mailed to everybody on the planet if I could afford it. I'm trying to be funny, but this is the main thing I see over and over again. Beginning metals investors should concentrate on pure bullion bars or coins in smaller sizes, looking to pay a minimum premium over the actual metal value. Avoid commemorative coins, decorative items, jewelry, and other collectibles, all which carry a large premium and have limited resale. So keep it simple. You want to get as much silver as you can for your fiat. And it's best to start with coins, but after you have stacked a fair amount, you can move to bars. They're cheaper and they stack easier.
Well, that does make a lot of sense. And yeah, I've always or generally been a proponent of just getting whatever silver per dollar is the best value. I mean, certainly if you like a particular silver coin, go for it. And was interesting that the woman that bought the large gold and silver order, she actually went for silver eagles primarily, and a few others, which I know Bill Holter said she just wanted whatever was the best. So that's what she chose, and certainly her right. But I think it makes sense. Not that there's a one size fits all, but what you mentioned there. And guess that leads us into point number 3: boost the buying power of your dollar with mining shares. And why don't you take it away from there?
Yeah, if you're a typical investor, you cannot expect to be an expert on silver in the silver market, but you can invest in people who are. Once you've established a core holding of physical silver, leverage your knowledge and your buying power by purchasing the stocks of mining companies. These shares are highly responsive to changes in the silver price, frequently producing much higher percentage returns than the metal itself. So, that's kind of the bread and butter of the Morgan Report. I certainly have advocated to everyone, always and everywhere, to start with physical silver first. And a lot of people that I've met through my travels do that, and that's all they do, and that's fine with me. But as this one says, if you want to get leverage, you're going to make more money in the paper markets in silver than you will in the physical market most of the time. There are exceptions to that, but it works both ways. When you're in a hot, heated market moving up rapidly, these paper investments can do quite well. But when you're in a correction or a downturn or a bear market, these things can get creamed. And then there's the rule about the junior sector, which everyone seems to love because they're touted more and more all the time about junior explorers, junior explorers, junior explorers. That's a good way to go broke if you took big money in it. You have a 1 in 4,000 shot. But in a hot market, any moose pasture with a gold or silver title on it can move higher. So you just have to time it well. I'm a free market thinker. So if someone wants to buy into the mining sector, I think you should do it smart. I had to learn the hard way. I put too much money in these penny stocks and lost some money as a youngster. And when I started the Morgan Report, I wasn't going to put any explorers in. I changed my mind, but we have done quite well by being rather conservative and weighting the portfolio accordingly. Big money in big companies, mid money in mid companies, and speculate efficiently.
Yeah, and along those lines, one question there: are you surprised at how hard, especially some of the junior miners, have sold off over the last couple months? Certainly, what you just mentioned, we did.
Yeah, I mean, there are situations where you can buy these stocks for less than the treasury. I mean, it's ridiculous. So yeah, I've seen that in the past too. I'm so old. I've seen it a couple times. And it really does irk you. I mean, think about it. If you had XYZ widget factory and you had $1 million cash in the bank, and the company's market cap was 500,000, hell, you buy up all the shares. Of course, once you do that, the market will start to move up. We all know that. But in theory, you could buy it for, 50 cents on the dollar, so to speak. Not just the cash, but the whatever else it has, the factory that makes the widgets, the widget parts and all that stuff. So anyway, yeah, they can really get oversold. And of course, that's where we are right now. So, if you have any risk tolerance and can take some risk, we're pretty close to probably the final bottom in this, at this phase of the market, this last phase that I believe is going to be the best one. Hard to
Yeah,
say that with what's going on, but I still think that's the case.
yeah, and one anecdotal note on that, I did talk with a friend who is a large gold and silver investor, and he said that he was actually trying to get back into a bunch of these shares within the past week, was finding it quite difficult to do so, which I know, there's a balance. A lot of the companies are trying to raise money and not finding it the easiest environment yet. Just passing along that he found to reestablish positions, because some of them are so small and it's can move them a lot. So hopefully a sign of good things to come, if especially if we see a continued rally. And with that said, we'll move on to number 4, which is dollar cost average to lower your cost. And I like what you also add there, increase your discipline. So what could you share on that one?
Yeah, this approach helps you develop discipline, erasing the trader mentality that infects most market participants. Instead of Instead, foster an investment philosophy. Dollar cost averaging eases some of the sting when prices move against you, allowing you to view the downturn as an improved buying opportunity rather than a disappointing loss. So, that's what the silver stacker community, I think, has come to understand, or at least that's what I think they understand is, look, we're in a world of hurt and the global financial system. The US dollar has limited time left, and I'm going to stack silver. And that's, in most cases, dollar cost average. Again, going back to what we've already talked about, buying too much of the wrong kind, right off the bat can disappoint you a great deal. So, I like the dollar cost average. I do it in one account. I time it also. So, I do more than one thing, but, the dollar cost average approach is good for the best, really, for most people.
Yeah, it's actually also similar to what Peter Lynch, the former Fidelity fund manager, talks about in his book, where certainly someone with as much success as he's had was really almost outright against trying to time the market or assume that you know what the Fed's going to do or when things are going to go up and go down. Would you say it's a similar approach to that?
Yeah, I would. Yes.
All right. And moving on to number 5, we have do not get a raw deal from your dealer. What could you keep folks from
Yeah.
getting into trouble with
Yeah.
there?
I basically say you want to get with an established dealer. A good dealer will provide timely execution with fair prices and reasonable fees. We all know the premiums have been sky high on silver for the retail investor of late and has held that for quite some time. Note as well that the lowest price is not necessarily the best price. In the past, some dealers who squeezed their price margins too low in order to attract clients were unable to make delivery, leaving those clients holding the bag. And of course, bag silver is something you don't hear a lot about. It's referred to as junk silver most of the time. It used to be referred to as bag silver. Either one, it's the same thing. And that's why I use that, trying to make it pithy. But example is Northwest Territorial Mint. They always seem to have the lowest margin. Tolving was another one. Both of these people are out of business, and people were left holding the bag. On the other side of the equation, you got to watch the premiums. I mean, even the wholesale guys are, lapping up excess margins on on product, and it kind of bothers me in a way because hardworking, honest people out there buying silver when the spot price is, let's say, it's 20, and then they've got to pay, like, I don't know, 24.50 for a silver bar. I mean, a 100-ounce bar, it almost always has, depends on the dealer, but $1.50 maybe over spot, 250 at the most. But it is what it is. I don't run the market, but you want to be a little careful. You do want to shop around. Almost anyone that's on the internet's been there, I'd say, 10 years or more, you're probably pretty safe with them.
Yeah, it's a good point you mentioned that it's not necessarily the easiest business to run. I know people get frustrated with the dealers, especially when premiums are high, and not that there aren't some that are maybe not doing the best things out there, but a good tip to spend some time thinking about. And on to number 6, what's yours is yours, so keep it that way.
Yeah, this is one I should paint with silver. I should make this a Raiders emblem, silver and black. While it's wise to keep some of your silver where you could get to it easily, which goes back to rule number 1, it's also important to keep the bulk of your metal in a safe place, especially as your holdings increase. However, if you establish an account with a brokerage, warehouse, or other public storage facility, you should make sure your holdings are kept segregated and that you can inspect them when you wish. And I'm going to add on here, Chris, because I talked about this before, but Morgan Stanley was caught buying silver for clients, vaulting it, and turned out they never bought the silver, didn't even have a vault. And all that happened was they didn't admit guilt, they were just fined. The Hunt brothers on the other side of market manipulation and were just standing for delivery were banned from ever trading silver ever again. But here's someone that absolutely frauded silver investors, 100%. All they were given was a fine. They didn't even admit liability. And the game goes on. Morgan Stanley is still one of the bigger holders in the ETFs. I know JP Morgan's number 1. But, I think they should have been banned from trading silver for 10 years or something. So it's a pet peeve of mine. There's a lot of paper silver out there people get from a brokerage house with a fancy schmancy name on it. And they are 100% confident that that silver is being stored and vaulted for them. And it isn't even there. Or it's been sold many times over. And that's part of the business that hardly anyone ever talks about, but it is part of the business. In fact, the Morgan Stanley kind of the defense was that it was standard practice in the industry to do this. So they're buying, silver futures and pretending it's physical and then vaulting it in their, computer somewhere. And if someone ever does stand for delivery and say, I want to see my silver, well, we can't show it to you because we don't have a vault, but we'll cash you out. So most people will cash out. But the reason you own silver and gold is you don't want cash. It's the anti-cash. And you want a direct sale with silver. You want to spend it. Of course, let's not be foolish or myself be foolish. I mean, most of the time you do have to convert it. I understand that. But there's a lot going on behind the scenes that hardly anyone ever talks about or knows about. And that's the problem. I think there's been enough silver bought in IRAs and the Roth IRAs and what goes on in Canada, the RRSPs, and other savings places. I mean, the silver story's been out for a long time. Look at all the people that are in the silver market and the commentator level. I mean, you got Arcadia, you've got myself, you've got TF Metals, you've got Weir, you've got Butler. I mean, you've got all kinds of people. So I think if you added all that up on paper and saw how many ounces we had bought, it'd probably be far superior to what actually physically exists. But that cannot be proven. Maybe it's just my imagination. I doubt it. I think a lot more exists on paper than exists in physical reality. There's a lot of people that will, my previous metaphor, be left holding the bag when things start to unravel.
Well, I know what you mean there. We saw that miscount during Silver Squeeze weekend last year, acknowledged a couple of months later. Certainly, you just look at the volume on the COMEX, and I tend to agree with you that probably a lot more paper out there than actual physical metal. Although we'll keep moving on to number 7, where silver speculations like cough syrup, good in small doses, but too much can make your portfolio sick. I think that's a great one, and would love to hear what you could add to that.
Yeah, well, again, trying to be pithy. And, this is one I'd like to mail to everybody before they make their first silver purchase. The main complaint I get, even from my own, premium clients, and they're, very wonderful people, is, they just go too they get hurt because they put in too much, they don't balance out their portfolio. So depending on your individual goals and personal tolerance for risk, small portion of the assets you commit to silver could be used for speculation, perhaps in futures contracts or options on futures. Never forget, however, that this type of trading is speculation, not investment. So, that's specific to the high risk, high reward part of silver, but I'd even apply it to silver itself. I mean, you know, if you consider silver itself, physical stacking as a speculative hedge against monetary uncertainty, you've got to determine. I mean, if you go to Egon von Griertz, I consider him a friend. I've met him, face to face a couple of times. His adage is, how much you put into gold and it's how much money don't you want to lose, And I get it, I get that. And so I could make the same statement. It's just that if you decide to put a large portion of your net worth into the metals, be smart about it. Realize it's a market that goes up and down and it's hard to time. And you'd be better off probably dollar cost averaging. But anyway, probably enough said for Rule 7.
Well, I think that is wise advice. That's one I've continued to learn the hard way on and think a lot about these days. So I appreciate you mentioning that. And number 8, a little information can mean a lot more dollars.
Yes, you do not need to be a student of the silver market to profit from metals investments. However, you greatly increase your chances of success and size of your potential profits if you understand the fundamental factors that drive silver prices and pay regular attention to the current supply and demand considerations. Of course, I wrote that probably 20 years ago. And we know, even back then that the market wasn't really a free market situation, but none of the markets are. I mean, if you control the interest rate of price of money, you control every market because every market depends on credit to some level. All the futures markets, the stock market, the margins on the stocks, bond markets, their leverage, everything. So, but the idea being that you should, understand the silver market. And now I'll just plug my book here. I mean, for $40 or whatever I sell it for now, I'm not even sure. The Silver Manifesto, if you are a silver advocate, is something you might want to consider getting. It gives you some pretty good insights into fractional reserve bullion banking, which most people don't even talk about, silver manipulation. What does the end game look like with do we even need money, which is the last chapter in the book. How to pick a mining company, go into great detail. So if you're a DIY, do-it-yourself investor, you can buy that book for $40 and basically lay out step by step how to choose a mining company. Shameless plug.
Well, that's all right. I think that's something that people would be well served to take a look at. And or actually, real quick, can you mention where people can pick up a copy of the Silver Manifesto? If they would like?
Yeah, I used to have it on Amazon and it went away. So don't go to Amazon. I mean, I've seen them as high as $200 on there because they're used copies and someone wants to, flip the book. Just go to the website. We mail them ourselves. So if you go to themorganreport.com, there is a tab that says books. Pull down the tab and it'll give you the 3 books or 2 books that are there. And it's pretty easy how to do it.
All righty. And then leading back into number 9, collecting silver is an art, but not really an investment.
Yeah, I only find silver items like the rare coin market, or maybe even silver tea sets or silver spoons or silverware or silver jewelry, any of that stuff. It can provide a great deal of an enjoyment and personal satisfaction, but like paintings and other artwork, they're beautiful and quite often valuable. If you're an astute buyer and seller, it can generate profits. I mean, the whole art industry is, some pretty wealthy people delve into the high-end art market, but they're not investments. When you need your silver or simply want to cash in, you don't want to have difficulty selling or be forced to forfeit a large aesthetic premium, both of which are likely to happen with silver rarities. And that goes back to the premiums we talked about a minute ago. All premiums shrink in a hard market. So for example, if I go to a local dealer here in Spokane, not at this point in time, but let's say, and I don't know the future. So let's say 2 years ago, and I had a silver eagle and a silver round, I would maybe get 50 cents more for the silver eagle. He's going to pay me spot on the silver round. Most bigger dealers will pay you spot on a silver coin, whether it's privately minted or government minted. So in other words, you might pay a much larger premium, especially now on the American silver eagles, than anything else. And are you always going to be able to get that premium back? The answer is no, you won't. So you want to be a little bit careful about it. Now, there could be reasons why you want American coins only, and I won't get into that. I mean, if that makes sense to the purchaser. Again, I'm free market. If you want that, do it. I argued in this 10 rules of silver investing to get the most silver per dollar.
I think that makes a lot of sense. I frankly agree with you there, although again, obviously everyone has their own preferences, but a good guideline. And the last one, similar to watching out for too much cough syrup, but more than 10% is too much of a good thing. I know you've had some variations on that at times, but where are you feeling right now on number 10?
Yeah. And this one, I was, the last one. I mean, I was very deliberate about what I said first and very deliberate about what I said last, pretty deliberate about everything in between. But I want to leave people the idea that silver is super volatile. It's a market that can go in fits and spurts, and it can be very dull. As you know, Chris, I coined the market, silver will scare you out or wear you out. If you're short and it goes a little bit up 3 days in a row, you have a harrowing experience. Or if you're long and it goes down, significantly 3 days in a row, you can have a harrowing experience. So I just want to let everyone know, no matter how good the market looks or how worried you are about the future of civilized society, you must always remember silver should make up only a small portion of a well-diversified portfolio. I recommend committing no more than 10% of the average portfolio to silver, regardless of how strong you feel about the potential of the metals. If everybody that bought over the last 10 years adhered to that, we probably wouldn't have the gnashing of teeth, whining, and all the trolls that I seem to attract, you and others. It's not just me. Don't been saying the same thing, doesn't know what he's talking about, blah, 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 blah. Well, I do know what I'm talking about. And this is what I talked about. I said, hey, folks, this is how you do it. But, they are more apt to blame others than take responsibility for their own decision to buy too much, buy at the wrong time, and all that other stuff we've already talked about. Now, I did move this to 20%. And when I did that, it wasn't necessarily silver. I said that I was speaking at the Money Show, I believe, in San Francisco, California, at least an investment conference. And that's when we went into the first war in the Middle East there in Iraq. And I said that I was upping my position to 20%. And if you look at Jeff Christian from CPM Group, he did a study from 1968 through the about 2020, I believe. And portfolio analysis showed that you needed about a 25% exposure to gold. He only looked at gold to have the best weighting for all conditions. Ibbotson and Associates did a similar study. They came out with somewhere around 15.5%. And so my 10%, probably it's enough for just about anyone. But again, it'll save you those sleepless nights if you overweight it. I had a guy from Australia call me up several years ago, Chris, and he was a multimillionaire, and he got the silver story and decided to whoever he talked to on the phone to buy it from, that was like a no lose, could only go up, no brainer, and put in like $700,000 or something in the silver market. At the time he called me, it was worth about 500,000. He wasn't very happy, and he wasn't mad at me. He said the thing right out of his mouth, and I can't do an Australian accent. He said, "Man, I wish I would have read you first. I mean, you would have saved me so much pain and agony if I would have just, known about what you recommend or whatever." So anyway, enough said on that.
Well, I think you have a lot of good points there, especially it's good now that there are a lot of new silver investors in the market, and I think people are seeing what's going on out there and rightfully concerned. But I think these are some good guidelines to keep in mind. David, one last question before we wrap up. You touched on this in one of your videos I saw earlier this morning, but we've seen a lot of metal leaving the COMEX registered category and also the LBMA as well. How do you look at that? Where is that metal go to? Is it making up? We see silver supply, Silver Institute numbers show that there's a supply deficit. Is that plugging holes elsewhere? Or when we see those numbers come out, how do you put that into context?
Yeah, it's tough. I mean, I wish I knew, look you in the eye and tell everybody watching this, it's this, and I know it's that. Most of the time, it's fabrication for the mints. It's the Sunshine Mint buying silver off the shelf efficiently to basically melt down and extrude into these long bars, and then they cut them, stamp them out, punch them out, polish them, and weigh them. I was just down at the Sunshine Mint in Las Vegas not that long ago, toured the whole thing, and got quite a good tour, as I always have. I toured the one in Coeur d'Alene twice. This is the first one at their very, very big facility. And even with all the care and how they taught, the tolerances are so tight, they have a little belt that has the coins, and the computer actually weighs them. And so most of them just fall off into the main bucket. But if one's too heavy or too light, it gets kicked off to one side or the other. And that's after these extreme measures are taken to, extrude the metal and all that stuff. You still get some that are underweight or overweight, and they have to be melted back down and put through the process. There's a little more to make it a coin than most people think.
Yeah, I could imagine. And so some of the metal is perhaps going to the mints.
Yeah,
And
where else? I mean, it's probably when you start seeing massive metal come off the COMEX. So it's been my contention that it's kind of the metal of last resort. I mean, the COMEX is kind of a display case. It's like a showroom at a car dealer. They have their three best models on the display, and you go in to buy it. No, that's the floor model. We have to leave that on display. You can't have that. We'll get it from our source over, and we'll get it from our manufacturer. He'll send it to you. So that's sort of an analogy for the COMEX. The COMEX is there for derivatives. I mean, it's all about the paper markets, as you explained as well as anyone. But is there metal there? Well, the eligible category just means that people are storing their physical metal with a known bank or facility, like a transportation facility like Lubis or Garda or Brinks, or one of those that have big warehouses to move metal around. But that metal is bought and paid for, and it cannot be sold in the futures exchange without the medallion being changed, meaning the person that owns that and is storing it needs to sign something to say, okay, I want to sell it on the futures exchange. So you want to look at the registered category. That's all the dealers have, and that's been shrinking rather rapidly, which indicates that supply is tight. Otherwise, they would say, leave it on the showroom floor, go get it from somebody else.
okay. And with many people wondering whether, often the phrase, and I want to be careful here, but people say a run on the COMEX. Is there a certain point or level in which you would think something like that might be coming into play, or how should people look at that?
Yeah, that's a great question. I mean, probably the only one that looks, I should say, only ones that look at the COTs more than me, and I don't look at them like I used to, would be, of course, Ted Butler and Ed Steer. But I still pay attention to them. And I've seen the silver market get down to 35 million ounces in the registered category. I figured that's it. I mean, that is so low in inventory. And yet, in both cases, the market came back, meaning the amount of registered increase. It went from 35 to 45 to 55 to 65, back up to 100 in one case. So where is that silver coming from? And one thing that people don't seem to understand is how much of an increase there's been in silver production over the last decade. It's been very, very monumental. I mean, when the Chinese, I'll call it industrial revolution, hit in the early 2000s, they needed everything. They needed copper, they needed lumber, they needed concrete, they needed every commodity you can name. And of course, with the metals, 25% of the silver market is due to copper mining. 35% is due to lead and zinc mining. So you need lead, zinc, and copper. You're going to get a lot of silver with it. And that was the case. So, when that explosion happened, you got a real increase. So the inventories, Chris, left deficit from 1990 to 2005. The inventory went from 2 billion ounces above ground down to 500 million. We lost 1.5 billion ounces of hardcore silver went into the deficit, or made up for the deficit. From 2006 to present day, we're back up probably over 2.5 billion ounces. So the above ground supply has been rebuilt over the last 2006, so 20 years or so, roughly 16 years. So,
Well, I hear what you're saying, and it's not always easy to know where the metal is, what each person is doing with it. So I would say to folks, just take that as an indicator, and certainly something worth keeping an eye on. And with that said, David, I sure appreciate you joining me here, and nice to catch up with you again. Perhaps in wrapping up, you could let folks know where they can find you on the web.
yeah, I think the easiest thing is just go to themorganreport.com. Make sure you get on our email list. It's free. And you can get, we'll mail you stuff, especially if I get taken off of YouTube or whatever. So I'll let you go. And thank you again for having me on your Arcadia Economics. I appreciate it.
Well, I sure appreciate everything you've done, and thanks for joining me. And we'll look forward to catching up again soon, my friend.
Okay, take care.
Well, thank you, David. Sure appreciate your insight, especially as long as David Morgan has been doing this, and the millions of conversations he's had and time spent thinking about it. Hopefully this was helpful in terms of providing some guidelines of how to put things into perspective. Obviously, for me, when I see a lot of the money printing and concerns about the financial system, I've at times gone overboard, but hopefully this was helpful for you at home. And before we wrap up, would also like to thank BlackRock Silver, who brought us today's video. And as you can see here, BlackRock recently did a step out 1 kilometer at Tonopah West, drilling 702 grams per ton silver equivalent over 0.7 meters within 4.6 meters, grading 211 grams per ton silver. And as Andrew Pollard mentioned here, as the highest grade underdeveloped silver project in the sector, initial results from our 2022 step out drill program have more than doubled the mineralized footprint of the vein system on our Tonopah West project, alluding to substantial resource expansion potential. Drill hole TXC22-052, which you mentioned above, intercepted a thick, highly mineralized section of the Denver vein, roughly 1 kilometer beyond our maiden resource envelope, indicating that we're still in the very early stages of defining Tonopah West's full potential. And you can find out more about the results and everything that BlackRock is doing at blackrocksilver.com. Link to that and this press release is in the description field below. And thank you again to BlackRock for bringing us this episode and making some of this silver research possible. Hope you're having a great day out there. And to find out a little bit more about what's going on in the silver world, well, here's Rafi Farber's latest weekly silver report coming your way now.